Are you one of the millions of Americans relying on Social Security to fund your retirement, or maybe you're planning for that future right now? Well, what if I told you that a major change could be coming that could impact the way you receive those benefits? Stick around, because today, we're going to talk about what could happen if taxes on Social Security benefits were eliminated, how this could change your retirement plan, and what steps you need to take now to stay ahead. Social Security benefits are a lifeline for many retirees. In fact, more than 60 million people rely on Social Security to support themselves during retirement, with the average beneficiary receiving about $1,500 per month. But here's the problem. Up to 85% of those benefits could be taxed, depending on your other income. This can mean that a substantial portion of what you receive could be taken away, and you might not even realize it. Now, what if all of that changed? What if there was a proposal to eliminate taxes on Social Security benefits altogether? Well, today, we're going to break this down, explain the potential impacts, and give you actionable steps on how to adjust your retirement planning. But before we get into the details, let's first understand how these taxes work. Social Security is taxed based on something called the combined income. This is your adjusted gross income, plus any tax-free interest, plus half of your Social Security benefits. Depending on your combined income, your Social Security benefits could be taxed anywhere from 0% to 85%. For example, let's say you're living off your Social Security alone. If your total income is low enough, you might not pay any taxes on your Social Security benefits. However, if you have additional income from pensions, investments, or part-time work, this could push your income into a tax bracket where up to 85% of your Social Security benefits are taxed. Now, imagine that all of a sudden, those taxes disappear. No more deductions from your check. Sounds great, right? But here's where things get tricky. Let's talk about why these taxes exist in the first place. Social Security is a government program that's funded through payroll taxes. This is the Federal Insurance Contributions Act, FICA, tax. For years, we've all paid into the system through our work, and that money is supposed to fund benefits for retirees, survivors, and those with disabilities. The idea was that taxes on Social Security benefits helped keep the system solvent and ensure there was enough money to cover the benefits of everyone receiving them. But what happens when you remove those taxes? Well, the first issue is that the Social Security Trust Fund relies on the money it gets from these taxes. If we eliminate them, there will be less money coming into the system, and that means less money to pay out benefits. The Social Security Trust Fund is projected to be depleted by around 2033 or 2034 if current trends continue. Removing the taxes on Social Security benefits could deplete the trust fund even faster, causing major issues for future retirees. Now, some of you might be thinking, that sounds great. I don't want to pay taxes on my benefits. And I get it. Nobody wants to pay taxes. But we have to consider the bigger picture. If we take away these taxes, the government will have to find that money somewhere else, right? And the reality is, that could come in the form of cuts to benefits or other changes to the system. Think of it like this. When you stop paying into a savings account, you have to dip into your savings to cover expenses. Social Security is essentially that same concept, but on a massive scale. If we stop contributing to the system, the government will have to pull from the trust fund to make up for the lost revenue. But as you know, just like with any savings account, once it's gone, it's gone. So, what does this mean for you as a future or current Social Security recipient? Well, here's the first thing you need to understand. There are both benefits and risks to eliminating these taxes. On the one hand, you'll have more money in your pocket right now. You won't have to worry about taxes eating into your Social Security check each month. But on the other hand, if the trust fund is depleted quicker, the benefits you receive could shrink, and you could face cuts down the road. Here's another thing to consider. If we eliminate these taxes, the government might have to find other ways to fund Social Security. And that could mean an increase in taxes elsewhere, maybe in the form of higher income taxes or new taxes targeting high earners. So while it might feel good to get that extra money today, you might end up paying for it in other ways down the road. At this point, you might be wondering, what can I do to protect myself and my retirement savings? Well, I'm glad you asked. Let's talk about some actionable steps you can take to make sure you're prepared for whatever happens with Social Security and retirement benefits. First, diversify your retirement savings. If you're relying on Social Security alone, it's time to rethink your strategy. While Social Security is a vital part of your retirement plan, you shouldn't rely on it solely. Start building up other savings, whether that's through a 401k, IRA, or even taxable investment accounts. The more diversified your retirement portfolio, the less you'll be affected by changes to Social Security taxes or benefits. Second, delay claiming your Social Security benefits. Did you know that delaying your Social Security benefits can increase the amount you receive each month? If you wait until your full retirement age, or even later, you could increase your monthly check by up to 8% per year. This can make a big difference in the long run, especially if you anticipate having a longer retirement. Third, consider your tax situation carefully. While we're talking about taxes on Social Security benefits, it's important to understand your overall tax strategy. In retirement, you'll likely have multiple sources of income, and some of that could be taxable. You'll need to plan accordingly to minimize taxes on your Social Security, your savings, and any other income you might have. Working with a tax professional can help you develop a strategy to manage your income and reduce your tax burden. Fourth, stay informed about the latest legislation. As we've seen, Social Security and tax policies are constantly changing. Keeping up with the latest news and staying informed will help you make the right decisions about your retirement plan. Subscribe to channels, newsletters, or follow experts in the field to make sure you're always in the loop. Finally, prepare for the possibility of cuts. No matter what happens with the tax situation, it's always a good idea to be prepared for the worst. Make sure you have an emergency fund set up and consider other income streams in retirement, such as part-time work, rental income, or annuities. Now, I want to hear from you. What are your thoughts on this potential tax change? Do you think it's a good idea to eliminate taxes on Social Security benefits, or are you worried about the long-term effects? How are you planning for retirement? Let me know in the comments. I'd love to hear your thoughts and help answer any questions you might have. Alright, let's recap the key takeaways from today's video. 1. The proposed elimination of taxes on Social Security benefits sounds like a win, but it could create long-term problems by depleting the Social Security Trust Fund faster. 2. Diversifying your retirement savings and delaying your Social Security benefits can help you maximize your retirement income. 3. Understanding your tax situation and staying informed about changes to Social Security can help you make smart financial decisions. 4. Always prepare for the possibility of cuts and consider additional income streams in retirement. 4. Thanks for watching today's video. If you found this information helpful, don't forget to hit the like button and subscribe to the channel. Share this with your friends and family so they can also stay informed about their retirement options. Remember, the more we understand, the better we can plan for the future. I'll see you in the next video, helping you stay informed, stay ahead, and stay financially secure.